I think a lot of people have been coming to these over the last probably. Hey, Sarah. Wait, Sarah, we want to see those emojis. That was cool. I think a lot of you all have been coming over the last, 3 months or so, and this is one of the public ones we're doing. Arian, someone I got introduced to, I don't know, maybe a year ago, I want to say, and he's really accomplished. Mentor at Stanford XR. He's mentor at Techstars. He worked at Meta for 4 years doing AI dev as a senior dev. And basically, his story in short, which he can tell you, was he started doing a bunch of angel investments, and some of those worked out. And so he's been able to launch a fund. And there's the man himself. Let's give a round of applause for Arian. Woo! Welcome. Woo! That was my bad, Arian. I forgot to send you the Zoom. I'm
No,
sorry.
you're good. You're good. All good. Thanks for having me.
You're the VIP, and I totally forgot. All right, I'm gonna spotlight you real quick, and we're gonna kick this off. Spotlight me. How do I do this? All right, cool. I'm gonna share my screen for a minute. Okay, so as I said, thank you everybody for joining us. Very excited to get this going. Um, this is the theme of the day today. And you might be saying, Don, why are there cockroaches? That's disgusting. Yes, true. But also, it is one of the strongest founder mindsets. And we're going to get into that within the first hour. So, Arian will be with us for the first hour. He's going to talk to us about the cockroach mindset, why that's so important for founders. And then we're also going to talk about how he's raising from LPs and how that's comparable to raising from VCs. And then for the next 30 minutes, it'll pass over to me. I'll give a quick summary of what we learned, and I'll talk about the Spatial Collective, which is our founder support system I've been working on for AR/VR founders. So before we pass the mic over, I always like to start these off with a story. And this is called Draper University. It's kind of like YC. It's basically an accelerator for really early stage startups, and I was a part of it back in 2015. Tim Draper is one of the most wild guys out there. He's a billionaire. He jumps in the pool with his full suit on. Guy's like absolutely out of his mind in all the right ways. And the whole point of this program is called hero training. And to me, I was like, okay, kind of, frothy, whatever. I don't care. I'm just here to build a business. Instead of building a business, this is what I did. Literally for a week, we survived in the woods to the point where I actually had to sneak into Tim's farm, catch a chicken. We had to kill the chicken, burn it that night, eat it, and that was our dinner. Like they didn't feed us. We had to swim across a lake with a makeshift raft. There was no pillows. There was no tents the one night. So we had 30 kids all cuddling up for warmth. It was like one of the most wild experiences in my life. And the whole time, a lot of us are really upset because we're supposed to be there. We're working on our business, and yet we're out in the woods surviving. And Tim just kept saying, this is entrepreneurship. You don't get it. This is entrepreneurship. And he was right. So basically, over the last 10 years, this survival mindset has what's propelled me to where I am today. And it's what Arian's here to talk about as well. I went from Draper University to start a venture fund. I raised $5 million for a fund I started called Candela. We invested into 30 something plus AR VR startups back in 2016. Then I, built up a name for myself in the space, and General Catalyst asked me to do a scout fund for them for augmented reality. So I did that for a bit. Then I went and started my own startup. We raised a $5 million seed round, did that for a few years in London, worked at Meta, and now I've been running the Spatial Collective. Why am I talking about, all this survival stuff? Because this idea of cockroaches is actually what is one of the most important things for founders to understand. This is a quote from the Airbnb founder, Brian Chesky, and he basically talks about how Paul Graham, the founder of YC, calls him a cockroach, and it's a compliment because he can't be killed. And this is this concept that we're going to really dive into today. The cockroach mindset is the difference. You need to have tough skin. You need to be able to withstand nuclear explosions, and you need to just survive and advance. So here's a quick quiz. These are three of literally the greatest investors in the entire world. That is Mark Andreessen, the guy who started Andreessen Horowitz, Andrew Chen, runs A16 Games, and the number one VC on the Midas list, Chris Dixon, who is also heavy into crypto. So what do they have in common? Some of you say they all work at Andreessen Horowitz. Yes, that's true. But the real truth is that they are all investors of Earthling VC and specifically backers of Arian. So we want to figure out, Arian, like, why do you care so much about cockroach mindset? Why do the greatest investors in the world, Tim Draper, Mark Andreessen, all care about this? Why do they back you? So maybe you could start off by giving a quick introduction to yourself and then talk about from a life perspective, like, why does this resonate with you and why do you search for founders that have this mindset?
Yeah, I think I mean there are two ways to answer that. I mean, one is kind of the personal me story. The other is the why does this make sense from a business building perspective point of view, and there's some overlap there. And I think for me, just to tie it quickly to get that out of the way, like, I think I am in the position that I am in because I think I would say my background is very unconventional, largely because of cockroach and just embracing cockroach mentality, even if that wasn't exactly explicitly the way I would have framed it at those points in time. I mean, really starting from really when I was a kid, we came to the US when I was in elementary school. And I would say my family had more of an American nightmare than an American dream, so to speak, in many ways. It's been a bit of a disaster. And so, constantly grew up pretty financially unstable, all of that, which I like to point out because I think there's an outward, probably rightfully so, idea that a lot of VCs just rich people that sit on money and all of that, which is true for a lot of them. It's not true for me. And so, I like to point that out in this case. But really what I found is that I think, Don, you sort of hit on it, is that the pattern that I saw in my life, sort of I'm 29 now, but just kind of, really coming from effectively zero to now, I think being on a nice trajectory in a pretty kind of close exclusive industry, if you want to call it that, is effectively an iteration of deep conviction and just like unhealthy attachment to doing something that I really believe in. And then in the midst of that, kind of making difficult decisions or bold decisions. And that's routinely somewhere in the other kind of just really provided these steps up, I would say, in the career path, right? So, like one of the things I think you mentioned at the top was that, I spent time at Meta angel investing, both as a senior engineer, but also as an angel investor. Like how did I get to Meta actually, right? And so because again, I didn't go to like a typical target school. Like I didn't go to MIT. I went to Georgetown, which is an okay university, but not for the tech stuff. The reason they actually hired me is because I dropped out of college and started a company that I ran for 2 years. And the company ended up failing, but the whole interview process that I had with Meta was really just apart from the technical stuff, was just asking me about my experience as a startup founder and all of that, right? And that was actually something that I grew really convicted in. Everybody told me it was a horrible idea to drop out of college and do it. I did it anyway because I was completely convinced that this is what I need to do. And I looked stupid for a few years, but in the end, it obviously paid itself out, right? And so that's just like one example, but it cockroach, you'll see if you do it long enough, you'll just get kind of steps up through that, right? And like so, you just need to kind of keep doing it, which I'm doing again now, by the way. Like starting a fund in 2024 is like ultimate cockroach move that you can do right now. Like again, that's probably not something that's so visible on the founder side, but um, it's not the sexiest thing to do right now, but again, it falls into the same mentality. This is really something where stick at it long enough, survive. Like there's a lot of upside to be found. So um, I think that's what it is. It's just constant pragmatic move of upward trajectory and things that you can do to really maximize the outputs for the inputs that you have to sort of just kind of keep this long tail of positive trajectory. That's really what it's all about.
And before we get into the more business side of this, can you talk about like what are some of the habits you have that allow you to remain mentally tough through the thick and thin?
I
And
mean,
maybe
yeah.
what are some habits you've seen from founders as well?
Yeah, I think it like one of the things, like not to jump too far ahead, but like is and something that I look for a lot in founders, for example, and I think that this is something that's been pretty true for me, is just complete commitment to the problem space that I'm working on. Like, in terms of like I'm just completely convicted that whatever X is at the time is like where I want to spend my time and find success. And just being extremely obsessed with that idea. And not, to be honest, being very even keel about it. Like, where for me, I think it was always kind of natural, but I think maybe if it's not natural for you, just understanding that if you're doing something like that, starting out at the very beginning, because Cockroach is really more at the beginning of kind of whatever that project is. Um, that a lot of it's going to suck, right? A lot of it's not fun. You're going to take a lot of rejection. Like you're going to, most of the
Do you
time
want
you
to
might
listen in?
work
Oh,
that you don't, I, I think someone had their mute off. You're gonna do things that people don't like to do or that you don't like to do, and you know, you just kind of persevere through that because again, you're so obsessed with kind of what like the end outcome is supposed to be, or where you're trying to get that you kind of can just tune some of that out. And I think that's like a, you know, we can sort of, I don't know, use that maybe as a dovetail to talk about the actual founder side of things and, you know, kind of from the VC, how I look at founders with that. But I think that can usually be a pretty good proxy for, you know, do you have a cockroach? Like, are they pretty obsessed with what they're trying to do, and what they're trying to like, what problem they're trying to solve effectively?
Yeah, there was do you know Jig Space?
Yeah,
The, so I met
yeah,
Zach in 2015 and he went through Boost, but back then, I mean, he was the most committed person I've ever met to 3D. And I just remember thinking like there's no way this guy stops, whether it takes 10 years or 20 years, this is just
exactly.
what he's doing. And sure enough, you know, and he was on Apple's launch stage finally, but like it
Yep.
literally was horrible for him for 7 years straight. I watched it.
Oh
Um,
yeah. Zach is a great example. I think I'm a big fan of Zach. And I agree with you. Like Zach is 100% the guy that you know that like he's going to run through a brick wall to make this thing work, right? Like and that's really what Cockroach is, right? And um I would say generally, right, even right now, though, probably most people that are persisting in VR by definition are cockroaches because it's an inherently unsexy industry right now. But you know, for like you know, kind of zooming out from the VC perspective, like I think this becomes particularly important. You know, when you start looking at industries that really start to pop, right? Like crypto in 21, like AI over the last year, like this whole defense tech, hard tech stuff you're getting now, where it can be very easy that if you don't really, I think, probe for this, to just back tourist founders, I call them, right? You know, they're just doing it because it sounds cool. And those end up being really terrible investments, even if everything else sounds great, right? Maybe they have good backgrounds, they're presenting the right idea, right? There's a lot of good signal around it. Um, but those are not going to be the ones that really drive the returns. When inevitably, like building a startup, regardless of what you're doing, gets tough at some point. And like, you know, typically the tourist founders are the ones that will quit, and the cockroaches are the ones that don't. And so for you as a VC, of course, like, you know, you just the only I always say like the one thing that's completely non-fungible in a startup, particularly very early, like, you know, if I'm going back to the perspective I invest pre-seed, is the founder, right? Like anything else can change, right? Like, you know, the rest of the team might change, the exact problem space that they work on can change, the means with which they solve a problem may change, but the founder is not, right? And so particularly very early, it's probably most important to underwrite that. And I think Don, to your point about, you know, I kind of consider myself like a disciple of like the Draper School of Cockroach for sure. You know, more directly kind of through Adam, but um like that, I think that's why smart people just come back to the same realization that you can make whatever fancy models that you want and like fancy theses about why a business is good and isn't good that you want, but at the end of the day, it comes down to people. I can say definitively I've lost the most money investing when, particularly earlier in my kind of investing career, where I decided to not care that much about the founder and just really try to underwrite the idea and the business and the opportunity. All of my worst investments were those. All of my best investments were the ones where I'm like, this guy is fucking great. I don't know if he's solving the problem the right way or whatever, but this guy is amazing. He's going to run through a brick wall to make it work. Lots of ups and downs in those. Like there's definitely a trough of despair with a lot of those companies, but those all ended up being some of the better ones up to this point. And you know, so you just see that over time, and you back dozens of companies, and you just sort of start to realize, like, okay, there's a bit of a trend that you see at a very high level between the investments that do well and don't do well, right? And it comes down to people.
And I think when the first time we spoke, I think you only had Andrew Chen as an investor. Correct me if I'm wrong, but the point
Yeah.
of the question is, how many startups did you back prior to starting to raise capital for your own fund? And can you talk about maybe like what you looked for back in the day versus how that's changed to now?
Well, you know, the funniest thing about this is like I was on a podcast recently where they asked me like, what was your first investment ever as an angel? So to answer your question at a high level, I think I did about like 40 investments or so before I decided to start a fund. And those a lot of those were sprinkled like not in really like the areas of interest here, right? Like in VR and stuff. Like particularly when I started out, actually did do a number of investments and opportunities that I just saw that were things like CPG, for example, right, which has like nothing to do with VR. And so, um, my actual first investment opportunity that I had, and this is I think a really good case in point on this whole cockroach thing. Um, this was I think some people might laugh, but it's like a better for you gummy bears company or like sweets company, basically. So they make all this like low sugar, low calorie stuff. And so I saw that deal. This was like kind of right when I started at Meta, through a friend of mine that I went to college with that worked in private equity, who had a friend who worked at a different private equity firm that was doing CPG, and somehow that deal came to me through them. And this is the first time looking at deal ever. I know from my startup experience that like, hey, I think I want to triangle investing and all of that. But anyway, I ended up just backing this guy, right? Even though I don't know anything about CPG, I don't know anything about gummy bears, I don't know nothing about it, right? The only thing I knew from talking to this guy for like 2 hours is that, this guy he was from Canada. I think he built like one of the most successful better for you ice cream brands in Canada or whatever. And he got kind of dicked over by some of his like ex co-founders and stuff. And so I was just sitting there like, this is a guy that knows how to do this business. He knows it inside and out. He has a chip on his shoulder because he got screwed on his last startup, but he clearly knows how to do this. Just seems like a legend, right? So let me just give him money. That was literally about the extent of really the calculation that I made at the time. I would venture to say that to this day could still be the deal that makes me the most money and I've put into any deal since then. And again, it goes back to the point, like this guy was great. So anyway, I started doing deals, and then I started to hone in a little bit more on things that I know, right? Like AI, VR and stuff. And that sort of started that trend. But initially I started to then try to complicate it a little bit because you start to see more deals, right? You have a little bit more comparative value between all these deals, and you start to get really analytical, right? And so like I would sit there and get like super duper analytical and try to be clever, like using my technical background about why I should invest in the company and why I shouldn't. And and it kind of didn't weigh the founder factor that much on a lot of these deals. Horrible. I think all the deals that were definitely burned money were those deals.
Can't predict
Uh,
the future, can only
yeah,
analyze people's past.
yeah, it horrible, right? And then anyway, I mean, you just do enough of that, and you realize like, wait a minute, like I'm just going to go back to just backing the founder, right? I'm just caring about underwriting the founder, basically. And
So can I cut in there and
so
ask a quick question around that?
yeah,
So like for all the people in the audience listening, what should they be doing to convey to you and to other VCs and even to customers that they're the right person to take that bet on?
yeah, that I think is a really like tough thing, and like I'll sort of like tune that specifically to something that I see a lot in VR, and because I assume that probably a lot of the audience here obviously is VR adjacent, if not. Um, So I mean, realistically, what you want to give VCs, and so like, let me actually take this step back, right? Like, I'm going to start with like complaints that I hear from founders, and then actually explain to you what is going on to sort of illustrate the point here. Like, one of the things that I think you see a lot on the outside, right, is you see like some, pre-product gaming company or so raise like 5 million bucks, right? And a lot of people throw their hands up in the air and they're like, how is that possible? Right. And like, how are they raising $5 million? They haven't built anything. Like, meanwhile, we're sitting here, we have some traction, whatever. We can't raise money. Like, what the hell's going on? I think the part that gets lost there is though that founder team that raised the 5 million bucks, let's say pre-product, there's something that was beneath the surface that you don't know, right? Some of it could be more obvious. Some of it could be that they already made a gaming studio and sold it for $500 million or $1 billion to somebody. They're doing another one, right? Makes it very easy for VCs to underwrite that, hey, these guys can execute, right? Like these guys can execute in the space. They've done it before, very high level. Makes it easier. They have some insight. That's one thing. The other thing, like I've even seen cases like this before, where the GP of a fund and the CEO of the company used to actually work together at some company for years, right? And so basically, anyway, point is that like the VC knows that GP and their competencies extremely well. right? Where it makes it easy to underwrite because it's like, hey, I worked with this guy for 5 years. I know what he's all about, right? I can underwrite him. Um, the problem, like particularly in VR with a lot of people, is not the problem, but the issue that I think a lot of people face is that there fundamentally aren't that many teams that fit into that profile where they're coming in very early in the company where they can actually point to things and say, we've done XYZ. That's why we have, it's very easy to underwrite that we know what we're talking about. We know what we're doing, basically when we're building the business. Um, and so the problem is in the absence of that, which is like very prevalent in VR, I think, where for all intents and purposes, a lot of founders tend to have what I would call more random backgrounds, right? It's like it's difficult to place them. The way you're going to build the conviction in a VC is execution, right? Like you're just going to have to show more upfront with the execution on your business than somebody that has a long track record of executing in that vertical, right? And like that, I think is the part that a lot of founders miss here. And it sucks, but like we all have to do it, right? It's like me too with the fund right now. I mean, I'm managing my first fund, right? Like if I had spent 4 years before it in Andreessen Horowitz as a principal, I could probably raise 10 times as much money as I am right now, right? Just sheerly because again, there's more to underwrite from the LP perspective. The same thing is true for startups, right? And so I think the important thing is to just not get pissed off about that. And that goes a bit into Cockroach as well, where, I think they're really good founders. And like, again, I've backed a ton of people that don't have, exited founder, ex-director at some big company backgrounds. Plenty of that. It's actually most of them don't. Because they've been very impressive with this, what they've been able to do with relatively minimal inputs, right? And like that, I think is the thing to just sort of that you want to focus on is like if you don't have a big logo background or something, it always helps, but particularly if you don't have that background, is really focus on, can I build the story that I am maximizing the outputs of my company with the inputs that I have available to me right now, and that ultimately is what's going to build conviction for a VC that like, yes, this is a team that can execute. So if I give them resources, I have pretty good inference that my dollar is going to go far with these guys, right? So I might as well back them. And that can take a little bit of time, right? Like that, particularly again, if you're very, very early, like I would say I've done this before. I mean, I've backed people that I've known for 6 months before I wrote them a check, right? Just because I met them, I watched them for a bit. We were casually chatting all the time. I followed their progress. I thought it was great. And I said, okay, now I feel like very convicted that this is a good place to allocate money. And that's just part of the pain and the cockroach of being a first-time early founder is it's not easy, right? And don't believe the headlines. It's the other thing I'd sort of just do to close that, right? Is that you're always going to see these headlines about some team that's at your stage that raised 25 times as much money as you have. Those are like exceptions to the norm, and you should obviously never really anchor your expectations to the exception. This is kind of the other thing I'd caution. It's like basically don't pay attention to Twitter too much about these kinds of things.
I think what you just said is the number one lesson I learned when fundraising, where you talk about how much output can you get with your input, because that evens the field to a ratio. If your input's $5 million, your input's $5, you can kind of understand how efficient they are.
Yeah.
The way I frame it is always like there's only one reason to raise ever, and that's that you have more demand than you have supply. And so that
Yep.
supply is fundamentally
100%.
limited by your resources, right?
I,
So that
I agree. Right. So like one of the things that like that happens to me a lot, again, like particularly with some VR founders, this has happened to me on a number of occasions, is I would get an inbound from a founder and they would offer me some crazy deal like invest 50K for 10% of our company. Now I'm going to ignore the fact about like why I would not do that as a founder, but that aside. And so on paper, you could make the argument and saying, hey, I can buy into some studio, like 10% of a studio for like 50 grand. That's like unheard of, right? Now, the problem is, um, like if I still have nothing to underwrite, it doesn't matter how cheap it is, right? Or like how much of the company I'm buying. Like if I can't build inference that this is going to be a big thing and like actually be like, fit into the fund math that I'm trying to go after, it doesn't matter, right? So that's and actually I think it can be a bit of a negative signal to some investors if you're kind of desperately trying to jump out like that to raise a little bit of money. So just, focus on what you can do, right? And the thing that you can do is, I think, Don, to your point, right, is just show that you're capable of executing, right? And when you show that, when you really make a clear story of, hey, we're doing really well, it's all in front of you here. We're trying to raise to accelerate. You're much more likely to get some traction on that than, just saying like,
Yeah.
I need money so that I can just sort of start building my vision. Like that's never going to work again, unless maybe you already built $1 billion company and you sold it and you want to start another. Sure, then you've earned the right to make that kind of request. But for first time founders, that's not going to be true. And that's not even accounting, I think, for the extra difficulties that currently exist in raising for VR companies, which is a whole nother shit show for all intents and purposes.
Yep. So I want to do something real quick. There's two things I want to make sure we cover. One is audience questions.
Yeah.
I don't pre-mute anybody or do this as a webinar. Like literally anyone can jump in. So I want people to kind of raise their hand. Before we get into that, please start thinking of your questions. I want to do one more thing with Arian because I think this is like something that's an unbelievable insight that only he can provide to us. And that is, how did he raise from the Mark Andreessens, the Andrew Chens? Like, how did he actually pitch himself? What's the pitch? So can we, and this is also a question from Nate in the audience. So can you maybe pretend I'm, let's say, Mark Andreessen. Nice to meet you. And, you come into that meeting. How do you go through that meeting in the first few minutes? And then where do you take it to ultimately raise the capital from those level of investors that frankly see everyone in the world and know how to fund only the best?
Well, I'm gonna give you a bit of perhaps a different answer here, but I think it comes up to the same thing. So there are two elements to this. There's the call and the actual pitching process that you control to some extent, and then there is the back channel. And I think this is very important because I think VC fundraising fundamentally works the same way. So let's just take like Mark Andreessen and Chris Dixon as an example because they invest together. Um, so it's a product of compounds, right? Of things that I have done, right? So I had a longer standing relationship with Andrew Chen already. I had another LP that happens to know them for all intents and purposes as an entity. And so part of the reason why it came in very hot into that meeting already was because I had effectively one of their colleagues already advocate for me, plus, someone that they had invested in that's also invested in me advocate for me, right? So I'm actually coming in. So I would say 50% of one foot in the door is already coming through that you're coming in very social proofed. And I think that this is something that's actually also very true for raising VC as a startup, right? So it's basically, to make it very blunt, like you're much more likely to raise money from investors that are friends with the investors that are invested in you. Like it sounds very stupid, but like this is really just how it works, right? And so like for me, it worked kind of in a similar way.
Or just friends with people that they trust. They don't
Yeah,
necessarily have
right.
to be your
Yeah.
investors.
Yeah, right. But like it especially hits double, a lot of GPs talk, a lot of investors talk, right? So investors that they like or that they respect invested, like odds are they're more likely to invest when you take like your odds are like of what you have to convince them is already like a lot lower if you're coming into that call than if you're like pitching ice cold, right? Like of course everybody's gonna have to find like their first investor and the first guy that's gonna take the plunge, right? But like really I think the secret that at some point is to just continuously like lean into like raising from a kind of like clusters of circles that are kind of well connected with each other. That's usually what you see get done anyway in VC land. But I think the meeting itself is like I'm going to take this from like my perspective as a GP pitching LPs and sort of apply it back to founders because I think it's you're principally dealing with the same idea. It's just maybe the means of which you go about it is different, right? So like what my job as a GP is when I pitch an LP is to first figure out, are they interested thematically in the space that I'm interested in? Have they already made a decision that this is the kind of space or sector that they want to allocate to? That's the first part. And the second part is just basically giving them all the arsenal that they need to make the decision of whether I'm the right guy to do that for them or not, right? Basically allocating to that space. I think founders have to pitch VCs in a similar kind of mentality, which is that, and I think with VC it's a little bit more straightforward because VCs, of course, verbalize what their thesis is and what they care about, right? So it's a little bit more easy, but your job is effectively to pick on one of those things, or just already going to the call knowing that like, hey, this VC is interested in X. All I have to do now really is convince them I'm just a really good person to do that for them, which goes back to the first point. The one issue that, so I actually say that this is important because one mistake that I see a lot for the founders make, and I think this is like, some VR founders make this mistake as well, is the sort of like casting the net wide,
Read this,
like
Anna, Little Red.
philosophy.
Hi, I'm from Ireland.
Sorry, one sec, Arian. I accidentally muted you trying to mute them. All right, you're good.
I love how you need to approve. I need
Sorry.
to approve you to unmute me. All good. But they use this like this mentality of like, let me just cast the net wide and talk to like any VC under the sun, right? But like, if you're talking to a VC that like has no verbal interest in, for example, investing in a VR company, odds are you're wasting your time and you're probably not going to convince them that they need to invest in a VR company. It happens again sometimes, but I would say like normatively speaking, they're not going to leave you around. Those kind of investors, right? Maybe they follow on because some investor they like does it, whatever, right? But so really try to like focus on finding the VCs that you think have some reason to care about what you're doing. And that's already again halfway there. And then you just need to convince them that what you're offering, so you and kind of the opportunity you're following is an interesting one within that. But that first part is a mistake that I see a lot, actually, that, again, like a lot of VR fans will just try to pitch everybody, like even people have no interest, right? And you're probably better off not. You're probably going to hear split opinions on that, but in my opinion, like don't waste your time talking to those people, because you're not going to convince them that they should all of a sudden invest in a market that they didn't already decide they want to allocate to.
So I'm going to ask Chris to unmute himself and ask this question, but speaking for the whole group, because I can read the meeting chat right before Chris, and maybe just a really quick answer, Arian. There's not a lot of VR funds. So when you say that, it's like a brutal fundraising environment for everyone in VR because there's no one to go to, and half the people tell you they won't even take your meeting. So is there any advice, or is it just purely like focus on revenue, be a cockroach, and unfortunately you're just not going to raise?
Well, I think so. If my personal estimation is that they're probably like, if we're talking pre-seed, so if we're talking like first fundraising round, I do think there's a handful of funds that are like quite willing to invest like back with companies. Like me, obviously, Boost, Anorak, Hartman, like they're few, right? That'll do it. I think Speedrun, I know like in Dresden, they're trying to do a lot, but like, there's a bit of a harvesting problem, but like they're explicitly interested in that. Like the first fundraising round, I think like you can brute force together to some extent, if you're offering the right thing and you're doing the right things. And I can definitely talk about, I think, some of the pitfalls that I see at pre-seed, and like, I think it's agreed upon across the VC bench of like, we want to invest in VR, but we can't back these companies because X, Y, Z. The real problem, I think, is post first raise. There it's even more dire, right? Because again, I think there are willing writers at pre-seed, not that many, but I think enough to put a small round together. At seed, C plus, it gets pretty damn dire. And so the general, like, I sent an email to my founders like probably a few weeks ago where I basically said something along the lines of, expect that you're never going to raise money again. Like, yes, of course, there probably will come a time where, the fundraising market for VR kind of picks up again. I think that's kind of inevitable, but for now, just assume that the money you have in the bank is that, and you're gonna have to figure out how to make it work, and to basically like basically cockroach it out until you sort of get tailwinds again, right? And so, like, it sounds bad, but like that's really the best advice I have for you right now. Unfortunately, I think VR is an industry. I was actually talking to John Lai from the GP and Andreessen about this earlier today, that VR is actually very unique in the sense that it's easy to make money, and it's actually, you can run very, very lean in it. And so cockroaching is actually not so difficult compared to other industries in VR as it is in others. But it's probably some inevitable truth that's going to happen, because even though there are, even at pre-seed, like funds like me and Boost and stuff that want to back the R founder, we still can't back all of them, right? It's not enough of us, right? And so I think the best advice is really, and this ties a little bit to the pitfalls that I mentioned. Focus on a true venture scale market. That's one pitfall I see a lot, where maybe there are people doing interesting things, but it's not actually venture scaling they think it is. Focus on being capital efficient, and just focus on distribution. Those are like the three things. Like
and that mindset is all about doing the right things
yeah.
for your specific industry. And in VR, that means you're either top 10% and you're able to get that money, or you focus on revenue even more than a traditional SaaS founder. So I like that a lot.
Right. Like one of the things that like
One sec, Chris.
I'll stress here is like I'll make this quick because I do obviously want people to get a chance to ask their questions. But like I recently passed on a company and a founder that I really liked. Like, profile wise, like it was a great company. Founder had a great profile, especially, not the kind of stack profile you often find in VR. Everything was great, like really, really big fan of it. Ultimately ended up not doing it because the company was not very capital efficient. And my concern was that, dude, I don't know where your next money is going to come from after this, right? Like the rate that you're on, even if you raise the money you want to raise right now, you've got 6-7 more months. You're not going to be profitable. I don't see you raising $3 million with regardless of what you do in the next 7 months. That's just the market right now. But what are you going to do, right? And there just seemed to be some, I guess, lack of acknowledgement that that's like a very valid concern that they have to deal with kind of up front. And I just said, listen, like I love it, but I feel like I'm putting my dollars at too much risk here, basically, for all intents and purposes, right? And so that's just like an anecdote, right? Where like sometimes deals don't even get done for reasons that maybe aren't so obvious to founders.
Awesome. All right, Chris, thank you very much for being patient. That was awesome. Can you, I think you're unmuted already. Can you ask your question?
Yep. Arian, thank you. Don, thank you for having all of us here. Don's shared lots of awesome stories of hustle. I'd be interested in your story of hustle, Arian, if you're able to talk about the hook you found with people you're trying to raise money from, the angle you took, and how much pushing and nudging you did. Because there's a balance, right? We're trying to like constantly follow up to get their attention and constantly be relevant and connect to the things that they care about. Any stories come to mind?
So is your question kind of like more specifically in terms of like how I close capital from specific investors, or is it like kind of more general?
It's probably general. How do you get their attention to pay attention if you don't have a warm relationship with them? So it's that cold contacting or a warm contact, getting the right hook to know that your pitch is relevant to them.
I think there are multiple ways I think to answer that. I think like if specifically about cold outreach, like if your goal is, I want to just like do cold outreach to a bunch of investors or whatever and see if they're interested. I think a good litmus test for this, honestly, is, and I can dig this up and send it to Dawn, but Elizabeth Yin from Hustle Fund recently did a thread on how to basically do like very, very quick blurbs in like emails when you're doing cold outreach or so. And I don't even know if it was used for intros or for cold outreach or whatever, but I felt it was very accurate. I think a good litmus test is if you think that, you can put like 3 bullet points together in like 50 words that very clearly articulate like, hey, I know you're doing this. This is my background. This is my traction with it, right? Like, that can be very compelling, and I would assume that most people will respond to that. I think sometimes like I know there's a lot of like literature and stuff about like cold outreach and stuff, but I think the reality is if you come from a place where like I genuinely have, because I still do a lot of cold outreach myself, to be honest. Like it doesn't really end, right? Like I would say I still send multiple cold outreach emails a week to people that I find relevant. you really need to come from a place of like, I have a feeling about what this person's about, and I genuinely believe I have something to offer them. That's interesting. You're gonna have a much higher response rate than I'm asking for a favor, basically, right? Like, and I think that's just a mentality thing that will come through in like how you communicate that. And if you don't feel like you have something to offer to those people, that's interesting. Back to work. You know, it's like you know, you're progressively like moving up in the world, right? Like, you know, uh, great. Like I have big Andreessen GP LPs now, right? For example, like when I did my first angel investments, my first move was not to cold email Andrew Chen, right? It was to maybe talk to one of the analysts there or something, right? And slowly move up, right? Because at that point, like, what do I have to offer these people, right? And I just acknowledged that and was like, okay, but who can I talk to? Who can I connect with where there is something for me to offer to them and just move up, right? Like, and that takes some time, right? But like, I think the important thing with these networks is to understand that it has a compound effect. And I think that's something that doesn't get appreciated, that like networks are cultivated over a long time. And you're probably better off not going for home runs right immediately, but like slowly building your reputation incrementally upwards and upwards and upwards. And if you do that well, you know, like it'll start to come together. But I think one problem I see often, that not just with founders, but I think with a lot of people in this industry, is it's a very all or nothing approach, and they just give up too early, right? Because they're like, well, I didn't get the home run meeting, so let me just can everything. Like, it's not a good way to look at it. So find the people where you think like, hey, there's like a genuine touch point for like mutual, uh, uh it's like mutually beneficial, and then just work up.
And then anyone else wants to raise their hand, please ask a question about your startup. We can make it a general answer. Chris, also to double click in there, just my quick response there. I have like a list of 5 or 6 different messages that are cold messages, very short, that I'll go send in all my LinkedIn connections. Like literally, I'll hit the weekly limit on LinkedIn. I'll send 100, 200 cold messages. Even today, I still do this all the time. And I look at who responded. And according to what that message said out of my 5, I'll then reuse that the following week and iterate on that. And like, I'm constantly iterating, and basically it feels like I'm chiseling down my cold message to get to the root of what people actually, what triggers them to respond.
Yeah, I think it's good advice.
Thanks.
Yep. Alan, yes, I am absolutely spamming on LinkedIn, to your point.
I love it.
I'm the top spammer on LinkedIn.
Yeah, me too. I got the badge.
Yes.
Great
They think I'm
conversation.
a bot. It's bot detection based on my manual.
I actually have been kicked off 12 times for
There you
it thinking I'm a bot.
That's a badge. All right. Does anyone want to raise their hand? Otherwise, I'll read some of these questions from the chat, but I'd much rather have you interface. This is your chance to meet Arian. This is there you go, Nathan.
Right.
Way to be a step up person there. All right. Take your unmuted self and let's hear this question.
Sounds good. Hi Aaron, nice to meet you. My question in the chat was just basically, do you find there's much crossover between companies that are investing in areas right now that aren't XR related, but they're similar to XR products? Like, so like for example, if someone's investing in mental health related products and you have an XR related mental health product, like, do you find that that's a crossover that can be made fairly easily or not easily? Is it more like you need somebody who understands XR to get into it? Or are you seeing that kind of thing when somebody does understand the industry, has an interest in that, invest in that space already, they can make the jump over to XR stuff?
Yeah, I think I've seen that, and I think that, for example, would be like a good angle to take, because like to take your mental health example, like that's actually a good example because I have invested in an XR mental health company, and like a lot of their investors are actually ones that are like they're like mental health investors, right? They're not VR investors. So that definitely happens, and I think back to what I mentioned earlier, that makes a lot of sense, right? Because in the end of the day, like, yeah, you're using VR as a means, right? But ultimately, at the end of the day, you're in a mental health company. And so it does make sense that like, hey, let's reach out to investors that obviously care about that space or have a track record of investing in that space, because there's going to be something that they relate to, right? So I think that's absolutely a strategy to take. It's the same thing. Like if you do VR gaming, right, you should probably talk to like generalist gaming funds, right? Like which is a world that I'm looking a little bit more closely, right? If you do I don't know, VR fitness apps, you should probably talk to fitness investors, fitness tech investors, like absolutely.
Mhm.
So you're definitely, for the most part, not always limited entirely to like quote unquote VR and like explicit VR investors. It's going to be VR investors, but also investors that generally invest in the industry that you're building in, or the market you're building in, I should say.
Awesome. All right,
That's great.
Alan, I saw
thank
you
you.
had second hand up.
Awesome. Thanks for joining and bringing all this great information. I just had a quick question. You know, how many female founders have you personally backed in your kind of network? Because what I've seen, I've seen a lot of women founders just be completely ignored and cut out of this whole thing. And with less than 2% of VC going to women founders, I just wanted to know, have you had the chance to back women founders? And is there a difference in their approach to business that you think is beneficial or not?
I mean, at a high level, yeah, I've definitely backed a few women founders before. I think, like one of my favorite companies that I backed, Shape6R, is of course run by Inga, who's a woman. She's fantastic.
Best
I
company
mean,
in the space. Or
yeah,
top
they're
10.
I mean, they're really terrific, right? So, but I mean, to give more of a macro answer to your question, like I'm personally not particularly concerned with I know the 2% number that you're referencing and all that stuff, and I don't have a particular mandate to invest in demographics. I just invest in the best people, period. Like I don't really care what their backgrounds are. I back people from all different kinds of backgrounds, women, whatever. Don't really care, and I don't really psychoanalyze it, right? Like people are people, and again, I have an idea of, again, kind of to the whole cockroach thing, like the archetypes of people that we want to get behind, and I don't really care about the rest, whatever demographic description that might be. So, again, back to variety, and we'll continue to. It's just whatever the best is. One thing that I will say though about and this is subjective to my experience about this. Well, it seems like women are being crowded out of the venture space. Like, yeah, obviously the numbers are the numbers and the data is the data. But like, I mean, I can definitively say that 95% of the pitches I get are for men, right? And so if the amount of pitches that I see are that skewed, right? Like, of course, and I guess it's true for most people, particularly in spaces like VR, naturally the way capital is allocated gets skewed as well. And so I think for me, the question of this is always more like, to me, if it goes back to when I was a computer science student in high school, not high school, in college, and I was sitting in a PhD seminar, there were 20 students, so there was not one woman in it, right? So it's like, okay, like who's going to build the next generation of AI models if there are no women in this class, right? And so I think the problem to that is a lot more downstream, or sorry, upstream, I guess, than just the venture market having some sort of inherent bias. I think it's, ultimately you can only invest in kind of like the pitches that you get, and if that's skewed a certain way, odds are your investment's also going to be skewed a certain way. And I think the cause for that is a lot higher upstream than just the venture market.
Great perspective. Thank you.
Yep. Great answer. Thank you, Arian. Tom, you're next. I saw your hand up.
Hey, Aaron, it's Tom from Tribe. So I had a quick question. You mentioned XR is a hard market to raise in, and back in capital efficient companies. Just curious if when you're looking at XR companies in the early stages, you're looking for companies that purely focus on a narrow problem within XR, or companies that have potential to sort of go beyond XR and be omni-channel?
I think both approaches work. I mean, I'm definitely a big advocate for the fact that I think, AR VR as a medium is it's not going to replace the existing stack, but it's more going to augment it, and just, the way mobile kind of created a surface for all new kinds of experiences, you're going to have that same sort of jump with VR, right? And so there are experiences that can be, VR optimized, VR only, multi-surface, right? Works totally fine like you do right now between PC and mobile, right? Like, you can go on Facebook on mobile and PC, it makes no difference, right? Uber is more kind of like mobile only, right? Instagram is maybe like mobile optimized. So you're gonna have a similar sort of dynamic, and I think both approaches work if you're looking at it from a very kind of surface perspective. I think the big thing that some companies miss right now is if you're gonna be VR only or VR, like let's say VR is kind of really your champion surface, what actually makes sense right now? And so that I think the important thing to note there is not like what does theoretically make sense in 10 years from today, but me as a venture capitalist, right? Because I think maybe some of the things a lot of first-time founders don't understand is that when you take institutional VC money, there is an expectation of growth basically it's a bit of a gentleman's agreement between like the growth that company is going to go for between the founder and the investors. And that there are just a lot of categories right now that make long-term sense that are not underwritable by that VC model right now. And I think that's quite pervasive in the VR space right now. And so that's just something I'll call out. But I think to answer a high-level question, like all approaches I think work, and I'm actually quite bullish on. And I think you're seeing more and more companies start in VR, but then also have like a mobile surface and all of that, and really go multi-surface. And so I think that inevitably is part of the future.
All right, so we have 5 minutes left here, Arian. So can we try to power through?
Yep.
We have 3 members, Greg, Ryan, Marone, who want to ask a question, and then we'll finish up with Alexandra, and then we'll let you out of there because I know you need to hop. So let's start. Marone, can you kick off, unmute yourself, ask your question, and let's try to get this done in the next 5 minutes or so. Sorry, Daron, my bad.
Oh, sorry, I didn't realize you meant me. Hey, so
I'm a
I was
rapper. I love
wondering-
rhyming.
Yeah, so my question is, we are in a place where we actually have some, quite a bit of early stage traction. The question is there a specific amount of money or any other level in which you go like, this is the time to approach a VC and don't try before? And also, if you actually did a lot of the work, would you at this point still do angels or start transitioning to VCs as well? I hope the question is clear. I'm trying to do it really quickly.
Yeah, I mean, I don't think there's a one size fits all answer for this, because I think there's just so many elements that go into how, I guess, a fundraiser is determined. Like one thing I would definitely invite anybody that's interested to do, I do write about these things on Substack a lot. And so I actually wrote one post on this. I think I call it like market equilibrium for seed rounds or something like this, right? Where I sort of talk about this in detail, but just to do it, to cover quickly, like, ultimately early rounds are some sort of combination of like the team, and like the team is still gonna be weighed more heavily than anything, but then also like the traction and the opportunity, right? And so great, maybe you're doing something that you bootstrap to $3 million a year revenue, let's say. But if that market opportunity is not VC scale, you're not going to raise VC money, period, right? Because it's just the returns don't make any sense, right? Because for VCs, consideration has to be, can I underwrite this opportunity to become $1 billion business? Like, is this a market opportunity that could be $1 billion business? And if the answer is no, like, even if you've done very well for yourself, bootstrapping it, and VC is not going to underwrite it because it just doesn't fit their financial model, right? And you're probably actually also better off not taking their money in the first place. So I think the first thing to consider there is that, like, is what you're doing even suitable? Is it even venture scale? And
Yeah,
subsequently
which it
venture
is.
backable.
Yeah, got it.
You have some more to add there?
No, I was going to say, like, I think one of the biggest issues that I see a lot in VR actually is that there are founders that start companies that are probably better off being bootstrapped, or there are other opportunities, not venture scale, but the founders seem to think that that's not the case, right? And there's a disconnect there between the VCs and the founders. And so that's one thing I caution to be aware of.
Awesome. All right,
Thanks.
Ryan, can you unmute yourself and ask your question there?
Try, yeah. Hey, Arian, thanks for the great talk. Everything you're saying really resonates. I think you're about to get like 87 inbound pitch decks. I'm curious if you want to share with all of us any of your theses about the XR space already. I know you've been talking a lot about cockroaching, but like we've gotten turned down in the past because people have really specific opinions about the role of volumetric video in the XR space. And I'm curious if you've got theses about what's going to work, what's not, what kind of things you're excited about in the short term.
I took the liberty of collecting all the decks from our collective and putting them into a folder for you, Arian. So I'll share this with you after, by the way. You can see
Great.
this.
Love that. Yeah, I mean, I think for me as a VC, I mean, like the thing that definitely excites me the most right now is just like kind of like social VR and affect like free to play multiplayer, like those sorts of things. Because like the reality is, and that the power users of VR right now, like the ones that are spending a lot of time in the headset and the ones that are spending a lot of money in the headset, are sub 15 years old. That's just like what it is. Like people could be upset about it, whatever. Like that's the data reality of the market right now. So I'm just generally, I would say, interested in applications that are very geared towards that demographic right now. Like that's Gorilla Tag, I think, is a case in point. Like from a VC's perspective, like anybody would have loved to have been in another Axiom. And again, I see a lot of stuff happening in that space. I see a lot of very, very successful companies that are building up in that space right now. Like I'm lucky to be in a couple of them. And I think that's just where the biggest opportunity is. And so like I would kind of work backwards with, like who is spending the most time in VR and what are meaningful experiences you can make for them. And I've heard this from a number of apps, by the way, even ones that you might perceive to be a little bit more serious, they realize the same thing. And they realize that like, hey, we're working a bit of a mode that makes this fun for like kids or like teenagers and stuff. And that's just where the opportunity space is. I think there are a ton of ways to approach that. But like my insistence, like I think from a product perspective, would be more like that's where you have to play right now. If you're trying to pitch that, like, we're gonna build this thing geared at 45-year-olds, and because of our thing, like, all these 45-year-olds are gonna buy headsets and spend hours in a headset, like, will that happen eventually? Yes. Is that a bet that I want to necessarily take on some super early stage startup right now? I mean, I'm not rejecting it, but I think it's a much harder sell right now. And so that's just kind of like the lay of the. I will say volumetric video, like, yeah, I'm happy to kind of email that with you all. Like, I think Don can share my email like offline, because I have a lot of thoughts about volumetric video as well. But I'll keep it short for now.
Cool. All right, let's do 2 rapid fire. Arian, can you stay an extra few minutes just to
Yeah,
get
I don't have hard stuff. So
awesome.
yeah.
All right, Gregory, go first, and then Alexandra, can you ask your question after, please?
Howdy, Arian. Gregory with D-Sky. I've had a couple prior exits and have a stealth startup currently. My question is, given basically really rough scenario that you painted for VR funding, even at the seed level, why, outside of entertainment and gaming, because we're basically a B2B play, would you agree that like a multi-platform approach with VR or XR as one of the outputs or one of the available access ramps, that sounds like a much better, play than leading with VR, which sounds almost like a poison pill at this point.
I think that the question you have to ask is like, why are you doing VR in the first place? Right? Like, so just to add some color of like some of the apps that I see going to multi-surface, for example, using mobile, right? They're effectively social VR apps that can realize that that community can also persist on a surface that's not VR, but the hero experience is still in the VR headset. Like that's really where the best experience is coming. So I think like that like if you come with that intuition, like that makes sense. Now I think the other thing that you'd have to ask, like in your case, that well, if it's so easy to move away from VR, the honest question would be like, well, do you have to use VR in the first place, right? Because like I'm definitely not a believer in do VR for the purpose of doing VR. Like now do VR if you're doing something pretty novel that you need this kind of interface for to display as an experience. And so like that's the question that I would ask. But yeah, B2B is obviously a very different game, I think, than consumer in the first place. Like, I think B2B, there are obviously different preferences, different biases, like different game in terms of, you're selling the idea of using headsets in an organization, right? You're not selling it to individual consumers that are going to the app store. it's a different game. A lot of B2B VR companies got hurt pretty bad when the market crashed. Like I think those were the ones that took the biggest beating actually, because you know a lot of their contracts got canceled or cut down or whatever. So the game's just different. But it can work, and I would say principally I have seen anecdotally organizations that are quite eager to try it. So it's definitely a thing. But again, your game's different. So like, you know, what I'm talking about here, which is primarily consumer focused, is not going to necessarily be true for B2B. I will actually say that some of the more successful VR companies have actually been defense related. You know, like flight simulators and all that sorts of stuff, right? Even now I'm still seeing it, like that's kind of picking up again. But that's again, like that's very, very different. You're playing a very different game than if you're playing consumer. And so like the comments I made are primarily geared towards consumer apps.
Okay. One more quick question. What's up with Gene Simmons?
I'm sorry.
Your avatar?
Oh, the that was, I bought it as a joke from some like at the height of the crypto bubble. It's like some like NFT shit posting collection, and I bought one. So it's like what's like one of the shit posters, I guess. So I just never changed it. So you know, I wanted to change it, but a lot of people have been like, no, it's your like kind of like your brand now on Twitter. So I was like, all right, I'll keep it.
Okay. Thank you.
All right, and Alexandra,
Yeah.
you there? Perfect. You're
Thanks
the
for
closing
asking.
question here. So
All right. So it actually brings it back to the cockroach stuff. In order to fully tell that like story about being a cockroach and all of that to a potential VC or investor, you kind of have to tell this whole story. There's a whole history there, like all the failures, et cetera, and you never want to spend 20 minutes talking about failure when you're trying to pitch somebody. So how would you recommend sort of getting that the essence of cockroach in, but like concisely?
Well, I don't think that's a bad thing, actually. Like, I mean, I speak for myself here. I mean, I had a pitch call today with somebody where, in my case, like, I can usually figure out from reading the deck whether this is thematically a company that I want to back, right? In terms of like, it's an interesting space or whatever. Anyway, so I was on a pitch call with this guy where, again, like, kind of fit. It was a robotics AI company, which is something I'm very interested in. Anyway, long story short, this is a founder who was like from Syria. All right, he lived in Syria during the war, and he lives in Finland now. And he built this VR company, exited, he's building this robotics company now. Where the majority of our call was just me talking to him about like him building like an app, like a piano app when he was like sitting in Syria during the war and stuff, right? And these sorts of things where I found that incredibly fascinating. It also tells me a lot about what is the trajectory that this person's on, right? Like 10 years ago, this guy was still sitting in Damascus, basically getting bombed all the time. And now he's lives in Finland, has an exit under his belt, is building another company, right? Like, got acquired by Snapchat. And that color, right? So him coming from that background and sitting somewhere in Syria 10 years ago, and to where he is today, makes him a lot more compelling than if this was someone that went to a private school on the East Coast of the United States, and then went to Stanford, right? And his parents paid for it, and he got a job at Snapchat, and now he's doing this, right? Because on the surface, you could actually read that and say like, well, this guy's background is whatever. So anyway, it's a long-winded way to say that, like, actually, I think your journey into sort of like giving some insight as to how you're thinking and how you got to where you are, even if there's like, if you're being intellectually honest about like you screwed some things up along the way or some things didn't work, is going to help actually a VC build much more conviction on whether they want to back you or not, right? Because like I think really what a lot of, particularly at the early stage, it's much more human endeavor at pre-seed than it is a company endeavor, right? So like, really we're spending more time like, yeah, we know that this is a problem space we care about, but we really care about the person and what makes them tick. And so your failures are part of what makes you tick and why you think you're great today. Talk about it. Don't shy away from that. Like I think one thing that sort of gets misconstrued a lot is that like you constantly have to posture, right? And like constantly give this illusion of everything's great. I will actually tell you that at least like with the circle of VC that I work with, that authenticity actually goes a very, very long way. And just being very, very genuine about like your life story and what makes you tick and why you tick that way. So don't shy away from it if you think it's important.
Okay, awesome. Thank you.
And Alexandra, I'll add one thing there. I noted I raised 5 million when as a GP. So I raised for my own fund and then 5 million for my own startup. So basically like equal on both sides of the table. The one commonality across every type of investor, family office, institutional fund to fund, LP, VC, doesn't matter, is that you get along with them. So if they're
Yeah,
willing to talk with you for 20 minutes about whatever, good, bad,
Yeah, yeah.
go for it.
exactly right. Yeah.
All right, let's say goodbye to Arian, and then we'll move on to my closing presentation. And Arian, thank you so much. That was fantastic. We appreciate the time. Very
Appreciate
well
that.
done.
Thanks for having me, Don. I don't know if how you're kind of doing it, like with like I guess event notes or something, but feel free to like drop my email and you know like if anybody wants to email me, happy to connect there.
All right, that'd be awesome. And then I also collected a bunch of decks, which I'll send you as well. Let me go.
Sweet.
All right, I'll post your email in the chat box as well. All right, thank you so much for your
Awesome.
time.
All right, see you guys. Thanks
See
for
you
having
soon.
me.
Bye. Awesome. So does anybody know what the Lindy effect is? Have you heard of this concept? So this is something we talked about in the collective, but it's basically this idea that the longer something exists, the more likely it is to exist in the future. And that's really what like my greatest mentors have taught me. They frame it in a million different ways. They say you need to survive in advance. They say you need to stay alive. They say entrepreneurship's a game of survival. They call you a cockroach. But like this is they call it compounding. But this is the idea, is that the longer something exists, the more likely it is to exist in the future. And so when you think about what that entails as a founder, you need to be mentally clear. So you need to maintain some level of happiness. And if that means going home early from work one day to play with your dog or your cat or whatever it is, like those are small things that you kind of have to do so that you have that long-term commitment. And then the other thing this entails is that, you want to find support and you want to be lean. Those are like really important things, is that you're not spending money in the wrong areas. And that's kind of, the theme of today's conversation, is that entrepreneurship is a survival journey. And you basically start off being completely lost in the woods. You don't know anything. And then everything starts going wrong. You build stuff you don't need. You fire people you do need. You burn cash you don't have. And like you're kind of depressed in a quasi mode. And then you find a little bit of hope. And like I did this with my last startup. You get your first 2 test customers. You think you're on top of the world. You raise 500K, you raise 100K, whatever it is. You think you're on top of the world. And then all of a sudden that hope gets squashed and you're back down to probably even below ground zero. And it feels worse than it did before because it's been longer. And then you're, literally just about to give up. You're the person who's digging the gold mine and the gold's on the other side of the next hit, but you're about to give up. And finally you do that final chip and you get the gold and everything starts to work, and then you scale. And like I've seen this through so many VR AR founders over the years. It's crazy. I've told these stories before, but you name it. I pretty much saw their company go from pre-seed or seed to where they are today. Rec Room's the example I always note because they're the largest, but I've just seen it so many times that I'm convinced literally anyone can do it. I did a version of it, in my 20s, and I'm convinced that anyone on this call can also do it. So this is my little sales pitch. I hope that everybody is open to joining this collective we're creating. But we're really focused here in the Spatial Collective on building this mindset, which you saw with Arian today. Like he comes from a hard background. He's worked his way through and up the VC chain, and has gotten into, some of the best brands in the world. So next week on July 3rd, this is for the members. We're doing a private AMA with Ori, who's the founder of AWE. What we're going to do is basically no presentation, all cameras on. We just sit there and let's just talk with him for the hour and a half, whatever he's willing to give us, and ask your questions about AR. He's a world expert in AR. Ask your questions about the fundraising. He runs Super Ventures. He has his own fund. So that'll be really cool. That's on July 3rd at the same time, 2:30 p.m. And then We also have Peter Rojas from Meta coming. We have Nico, who's the managing director, General Catalyst. We have Moritz, who runs the gaming fund for Lightspeed. And then we have the founder of Road to VR that's coming to talk as well. So we have an incredible lineup, and we're going to do those as member conversations. If you want to join, I would appreciate, very much. This is my personal favorite part of the collective. Some of you have come to these each week. Some of you choose just to come to the big events, but whatever it is, like, this is my favorite part. We do these founder workshops. They're usually somewhere around an hour and a half, 2 hours, but everyone that's in our community can come. I lead the call. As I said, I've seen VR and AR from every angle. I've done a lot of this stuff. I've raised from everybody, and I know pretty much everybody. And so I try to basically give my insights to the members and help them learn. And then we've also built an industry database. I won't get into it, but it's got like 5,000 different people in there, broken up by investors, customers, founders, and press. So for example, if you're doing something in the AR space and it involves try-ons, you can literally go in there and word search try-on, and then you can see that Elizabeth Bond at Under Armour already bought an AR try-on test with the company QReal. You can click on her LinkedIn and you can then send her a cold message. So it's a really powerful cold emailing or cold messaging tool that I hope a lot of you start to use if you end up joining. And then finally, we run everything we do through school. So I collected a bunch of decks earlier. I won't scroll down because there's a lot of private information, but this is like one of the coolest platforms I feel that is out there. We have a calendar of all our events. So you can go in here and RSVP directly for the Ori one. You can RSVP for Peter Rojas. We have a classroom where it has a bunch of the interviews I've done in the past with my friends and people in my network that you can go there and watch the 48-minute conversation. We did an event a few months ago or last month with Boost VC and General Catalyst. You can go watch the recaps. It's just like an awesome experience. And then you can go also DM all the members that are in there. We have 117 members, and you can earn different things as you are interacting with the community. So it's one of the kind of like things that I've put my passion towards over the last 3 months. I'm really, really proud of what we built. We have had, out of the 121 people, only 3 of them have left in 3 months, and we have 118 members. So it's something I'm really, really proud of. And, I've been doing this kind of on and off for 10 years, AR VR community building. And so this is just like a manifestation of what I love. I'm putting the link in the chat. If you want to join us, we would appreciate it very much. It's $200 a month. And that is basically, you get all the events that we're doing, the private events behind closed doors, as well as the workshop calls with me. With that, we have 15 minutes left. So I'm going to take a step back and open the floor for anyone that has questions around your startup or something that you're thinking about that I can maybe help you with during the next 15 minutes that we still have on this call.